I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends? Hey, I'm just trying to make you a little money. My job is not just to teach you, but to educate, entertain, too. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. In any given market, you need to understand the themes, what's really going on, not in the averages, but underneath. So on a day where the Dow lost 224 points, S&P shed 0.08%, but the NASDAQ, where the hottest stocks are, gained 0.35%. Let's take a moment to figure out where the money's going and where it's coming from. Let's do the winners first, as they are stark and glaring. The first and most exciting group are the tech companies that suddenly feel like they've been immunized against tariffs. Yesterday's shocking decision by the president to bless Apple after CEO Tim Cook pledged $600 billion to build up American manufacturing. Well, that changed the coloration of this entire market. Suddenly, instead of Apple being a hunted beast, with the president going after them for making phones in China and then going after them for making phones in India, Apple became one of the president's favorite companies. Hence the remarkable 3% gain on top of a gigantic increase just yesterday. Oh, it's a remarkable turn. Come on. President Trump was unmoved when Cook promised $500 billion over a 4-year time frame to build back American manufacturing. Cook wanted to make those phones in India and export them here. Trump wanted phones all made here. But then Cook added another $100 billion, and that was enough to sway the CEO-in-chief. Come on, this is a staggering amount of money, even if some of it was already baked in. Remember the CHIPS Act under Biden? Do you know that was only $280 billion, less than half of what Apple's offering? And of that spending, only $39 billion went to direct subsidies to encourage semiconductor manufacturing. Meanwhile, Apple can shell out $600 billion without batting an eyelash. What a country. The implications of this blessing are far-reaching. When the week started, Apple stock was continuing to drift lower, looking like it would fall through the $200 mark, down from $214 after reporting a meaningful upside surprise last Thursday night. Concerns were twofold. First, where was Apple's AI strategy? Are they going to team up with one of the chatbots? Perplexity being the easiest because it's independent. Are they going to seek to be paid in some fashion other than an outright check, something that could earn them the ire of even this Justice Department? In return for a steady flow of traffic, could they work a deal with Anthropic, owned in part by Amazon, to a lesser extent Google, and yet it feels like it's an orphan and acts like one too? Without more knowledge, Apple's being hectored endlessly as an unimportant Johnny-come-never that's missing out on a major opportunity. The other bigger issue, though, was President Trump's very palpable enmity. I kept hearing that Cook and the president didn't get along because he wouldn't commit to making the iPhone in the United States. The drumbeat grew so loud that I even asked Tim in my private chat with him that I have a private chat with him right before the quarters reported. And you know what? I said, is it possible for you to work with the president? Tim, can you work with the president? He came back and he said that he has good relations with the president. Good relations. Now, the president often says he has good relations with someone like President Xi from China, who he clearly sees as an adversary. If Trump is friends with Xi, I can only wonder what he's like with his enemies. And Apple sure seemed like an enemy. That was the setup coming into the week. But Tim Cook, if he says the relationship is good, then it is good. And that gave me the guts to tell you to stick with it. Now, with the stock at $220, nicely above where it was when the company reported, I need you to think about what has happened in the last 24 hours. After a horrendous hand-wringing that there now looks to be no tariff on iPhones. None. Whether it be reciprocal tariff or the 50% India tariff that was going to put the kibosh on Apple's earnings. But how about its biggest competitor, Samsung? Have you been thinking about that one? I've been noodling. They own 31% of the U.S. market, number 2 to Apple, according to a recent survey from Canalys. Can this Korean company get the relative free ride of a 15% tariff, the rate negotiated by South Korea? Or could you argue it should be hit by a much larger tariff that embraces all the foreign semiconductors, which are now being tariffed at 100% and are embedded in the Samsung phone? Could there be a special tariff, not just on semis, but on all cell phones, save Apple, that are not made here? Could Apple go from being the most expensive to being the cheapest, the best one for the phone companies to offer so they can get new accounts? Isn't that what the stock's monstrous move from 203 to 220 in just 2 days is telling us? The pin action from the Apple deal with the White House reverberated through almost all of tech, making it a terrific sector to own. I say almost because against the major court of traditional tech, we had the minor court of a collapse in the cybersecurity cohort because of a disappointing quarter from firewall builder Fortinet. Stock plummeted 22% in response to that. As is often the case, there's too much collateral damage to others because they're all connected by an ETF. So CrowdStrike goes down, even though it's not a firewall company. It's a company that protects the cloud. Yet it was down almost 6% because of the markets practicing collective punishment. I say that's like selling hardware stocks because software's down. Oh, and by the way, software, whoa, the enterprise kind, that is just getting crushed. Think about this. If it involves coding, it's horrendous because AI, we don't need a lot of coding. I like to look for stories that have been red hot, okay? That have suddenly cooled purely because of guilt by association. This morning, Morgan Stanley put the wood to Caterpillar, downgrading the stock from hold to sell because of worries about tariffs. Look, there are issues with Cat, but we already know them. The company reported last week. I mean, we know everything about it. Got the conference call. I don't want to buy Cat, even though it'll get its fair share of reshoring orders. But the downgrade also temporarily stopped the legendary rally in the big three of engineering construction. Write these down. AECOM, Jacob Solutions, and Quanta Services. Now, I've been waiting for an opportunity. I wish these stocks had just cooled off for a second so I can tell Investing Club members to buy them. There will be too much business from the more than $1 trillion pledged by foreign governments and the nation state of Apple to rebuild American manufacturing. These three are going to get the lion's share of the contracts, and I kept thinking their stocks were unlikely to make any sort of break. Now you're finally maybe getting a chance to buy them on weakness. Last and least, I look at the drug stocks, and I can't believe how awful they really are. With now Eli Lilly at last joining the ugly fray, with its less than impactful, less thought weight loss. The pill. The street was hoping that Lilly would be able to replace its onerous GLP-1 injection with a simple pill that would produce an equal amount of weight loss. No such luck. The stock, it just got poleaxed, laid to waste. Only Johnson & Johnson seems to be above that fray, but I think that's in part because it's a medical device maker. That's the only hot area of healthcare right now. It is even why lowly worm Danaher caught a bid, and it's why Apple has no quit. Now, days like this, we should really celebrate, okay? And we should remember. I always say, you know it, Apple, don't fool around with it. Don't trade it. I say it because this is a company that always seems to get it right in the end. It's like the damsel in distress tied to the railroad tracks as a speeding bullet of a freight train barrels down on her. At the last minute, she always springs free. Of course, there's a reason with Apple. It's a confident company with the best products on earth that's run by one of the greatest value creators on earth, rivaled only by Jensen Huang at NVIDIA. So here's the bottom line. You need to think about the last 24 hours. You need to think about it and where this Apple stock has come from. You need to know what this is, why I say own Apple, don't trade it. And you need to obey that mantra or just go buy a darn index fund, because if you're not willing to trust a company as great as Apple, what is the darn point of owning any individual stocks anyway? Anthony in Pennsylvania. Anthony.
Hey, Jim.
Anthony, what's happening?
Kids and I watch Mad Money every single day. We appreciate you. We love your energy. I'm
thank you, buddy.
UNH, United Health. I wanted to talk about that company given the current healthcare policies, landscape, and rising costs.
You know, I have long, first of all, thank you for those kind words. I have long known, this is something I learned probably in my second decade of trading or investing. You do not buy or sell something where you have no idea what is really happening. And at United Health, there isn't anyone other than the CEO and probably 52,000 lawyers who has any idea what's going on. Anyway, the last 24 hours for Apple will only reinforce what I say. Own it, don't trade it. And if you can't follow that advice, then you should just go buy an index fund, and maybe I'm going to switch to ESPN or something for all I care. Oh, man, just kidding. I love you. I love you, right? I love you. Oh, man, Money tonight. Papa John's is soaring after earnings. I'm finding out what Wall Street found so delicious about this quarter with the CEO. Then Pinterest reported after the bell they had some very interesting to say about Gen Z, but who doesn't? Don't miss my exclusive. And Elf Beauty is struggling to navigate tariffs overseas. I'm seeing what the company has to say following today's major decline. And don't forget, Rode. That's what the people, the women in the office say. Rode, Jim. You got it like Rode. I don't know. To me, it's like Cormac McCarthy. I'm wrong. Stay with Cramer.
Don't Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.